So
good afternoon, sorry, Nicola. Yeah, go ahead.
I will only say thank you to you and to everybody, and I will let you continue. We're coming to the end of a very dense, very rich, and very comprehensive two-day forum. And this panel is dealing, I mean, our conference has been about looking ahead with confidence and about attracting foreign investment. And this is the panel that is actually going to discuss about investors who have voted with their portfolio and who are actively involved with Greece right now to tell us why. I will let Panos Katsambas, who is the partner at Reed Smith and a great friend and supporter of everybody else on this panel, to take over. And I will let you, Pano, introduce the panelists. By the way, because of the fact that we have 6 top-level panelists with a tremendously interesting agenda, this is, I think, one of the longest panels of the forum. So, Pano, take over, and we'll all be listening to all of you very carefully.
Thank you, Nicola. Thank you to you and to the entire Capital Inc. For having us again this year, and for all the efforts you're doing, even in the midst of the pandemic. And I hope that next year we can all be together in person again in New York, and be celebrating a great year for Greece and for the world as a whole. As Nicola said, I feel that this is a great panel because it suits the theme of the conference. We're talking about investing in Greece, Greece as an investment destination, and with us we have top investors. I think we're all very lucky to have Nikos, Alex Fotakidis, and Alexis Atteslis. We have also Christos Balaskas from Eldorado on the corporate side of investing in our country. We have Alex Patelis representing the government, and George Linatsas from the financial advisory side. We were expecting 2020 to be a transformational year for Greece, picking up from huge momentum in 2019, and with a number of significant reforms implemented or underway. While the pandemic wreaked havoc globally, the response in Greece was exemplary, and despite the challenges, we saw a number of groundbreaking investments, including in areas such as technology, venture capital, that we were not as accustomed to seeing in the past. We have heard a lot of positive commentary over the last 2 days at this first virtual Invest in Greece conference. And as we're about to wrap up, over the next hour, with the assistance of this phenomenal panel, we will try to dig into the details of what has worked, what has not, what we're doing well, and what we can do better so as to have a more successful 2021 and beyond. With that brief intro, let me start with Alex Patelis. As you are the representative of the government on this panel, despite the difficulties posed by the pandemic, we saw a number of high-profile investments in Greece this year, including some by investors in this panel, obviously. Do you find there is a common thread behind that momentum and those investments that we saw?
Good afternoon and good evening to everybody. And may I also extend a warm thank you to the organizers of yet another terrific event, and of course to our fellow panelists. So 2020 is closing to be a pivotal year for the Greek economy, at least as far as FDI goes. Despite the challenges presented by the pandemic, the country, as you mentioned before, managed to attract a significant number of new inward investments, and I would include to that Microsoft planning to build a data center region in Greece, making the country only the 28th country in the world and the first in Southeast Europe with a Microsoft data center. We have Pfizer, the drug maker. They've starting their digital hub in Thessaloniki as we speak. They received about 15 to 20% of their applications from Greeks outside Greece. They were so impressed by the caliber of talent that they have now announced that they will also be building a second hub, also in Thessaloniki, this time focused on services, and they plan on doubling their presence even beyond that. And then we have, of course, the Volkswagen investment in Astipala, Greek island. The company there is going to launch an innovative project on smart mobility and electric vehicles. We've had a number of deals announced, including Digital Realty purchasing data center firm Lambda Helix, We have CVC, we have Alex Fotakidis on the panel today, investment in Scrooge and elsewhere. We have Applied Materials, acquisition of Think Silicon, and Microsoft purchase of robotic startup Stathopoulos. And actually earlier today, we just heard of the investment that the German electric car manufacturer NextEco will be making in Greece to establish an assembly plant for electric cars and also a technological training campus. So what is the common strand behind these investments? I feel that first, it's political stability. We have a single party government now, and the experiment with populism is firmly behind us. Greece institutions withstood a decade-long crisis and have come out stronger. And of course, second, we have a reform-focused administration that believes in attracting foreign capital, a big break from the past. And despite the pandemic, we have passed over 140 bills through Parliament since the government came to power. And our drive to change the country for the better remains unabated. And third, of course, we have lower taxes. A lot of stuff going on there, but let me just highlight the reduction in social security contributions and the suspension of the solidarity income surcharge that is going to take effect as of 1st January 2021. And finally, last but not least, we have technology. Greece's 5G auction is taking place. It's actually taking place tomorrow. And 5G will be operational in major cities very soon. And the government has set up an innovative fund called Festos that is going to invest in 5G service startups. So my message today is, if Microsoft, Pfizer, and Volkswagen choose Greece to invest, shouldn't you too? Thank you.
Thank you, Alex. This is really exciting stuff, and to have companies of that magnitude and caliber making not just simple investments, but Microsoft in particular is a pretty fundamental investment for their business in our country is really exceptional. But let me ask a kind of a related follow-up question. You mentioned some tax changes. What other changes beyond having the political stability and so forth? What are the key changes in the legal and regulatory environment that your government, this government, has implemented over the last year that go to the heart of the issue and make Greece a more attractive investment proposition for foreign investors?
So there's a lot of stuff to talk about. As I mentioned before, the government has passed about 140 bills in total. I would say that just over 2 months after taking power, the government passed a bill simplifying licensing for business parks and also outsourcing the certification of investments. And actually, there's going to be another bill simplifying procedures and licensing that's going to come to Parliament early next year. There has been a lot of change in environmental licensing, a new framework for renewable energy sources. There's a new framework for the antennas for the rollout of the 5G. There's a procurement bill that's coming up to revise the way the government does procure services. We've had a new bill on electrification and incentives for that. There's been a new spatial planning bill. And then, of course, but I would say that the very significant part of all of these structural changes has been a change in attitude by the government. The government firmly believes that the country has an investment gap. This investment gap cannot be filled exclusively through national savings because they're low. So we believe in attracting foreign capital. And the Prime Minister has set together a team that is not afraid to seek foreign capital and to engage in foreign capital. And that, of course, requires trust. Any kind of business person or investment will tell you that a very important factor is trust. And this takes time to be built, but also can be enduring. Now, on the tax side, taxes do matter. This government also believes in lower taxes as opposed to higher spending. And there have been many tax changes. The dividend tax rate now in Greece is 5%. There is a lower corporate income tax to 24%. As I mentioned before, social security contributions for salaried income have come off by 4 percentage points, and the solidarity income surcharge has been eliminated. We have a new flat tax for stock options and for restricted stock units, just 15% or 5% for newly formed companies. There is, of course, tax credits available for companies for R&D expenditure, and now they're being extended also to green and to digital expenditures from the new year. There is a bunch of regimes to attract foreign investors, including a non-dom regime with 100K flat tax for those who move to Greece. There's a scheme to attract pensioners, 7% flat tax rate. And now we're also implementing a new scheme to, if you bring your job from abroad and you haven't been a tax resident of Greece, then half your income will be tax-free for up to 7 years. And that's to attract both Greeks who want to come back to Greece, but also non-Greeks or companies who want to create new jobs in Greece. So it's a lot of stuff together, but I do think the political stability also matters. And I do think ultimately it's a question of trust and knowing that there is a government in place that is committed to doing reforms, and knowing that there's administration in place that's committed to attracting foreign capital. That goes a long way, and we very much look forward in 2021 to partner with more of you and do more business, and of course accelerate Greece's growth rate. Thank you very much.
Well, thank you, Alex. That's great to hear. And obviously, the right attitude, trust, stability, and consistency are key attributes to attract investments. And I know also having someone where investors can, and you've been very vocal and open to investors and always able to listen to their concerns. So that's also a very positive. With that note, though, let me turn over to Christos. And I have to say, I was looking at my notes in preparation for this panel from a few years back. I won't say how many, so people can judge on their own. And the Eldorado's investment and what it went through in our country was used by some of the panelists as a reason why foreign investors avoid Greece. Can you take us through your journey and highlight what has changed, where you are now, the different approach that I hope you see as well, and how you position your investment, your company, your investment for the future?
Pano, I'm glad you're putting it in that way. Actually, Eldorado has been from an example to be avoided to, I think it would be very soon, a poster child of how Greece helps foreign direct investments. And indeed, it was a very bumpy ride, to put it politely. And in Eldorado, we do aspire to turn the investment in Greece into an example. Where it will reflect all the reasons why particularly international investors will place their trust in the Greek economy. Now, you've asked me how was the journey? And indeed, we've seen it firsthand, a transformation, because that's how I call what I've seen the last 1.5 years, how the government has worked to attract foreign investments in Greece. 3 things that come to my mind. Firstly, hands-on intervention. Secondly, collaboration and working partnership. And thirdly, legislative changes, simplifying processes. I will briefly elaborate on that because people need to understand what has happened. What in Eldorado we have seen the government officials, the ministers, the deputy ministers, and general secretaries that were assigned to our case, that they actually intervening to expedite processes. So in the past year, we have received permits that we've been waiting for really quite some time, and they were stuck in the bureaucracy. Those officials, ministers, deputy general secretaries, they're mobilized. They're expedited the relevant permitting processes with this hands-on approach. So this is something that we haven't experienced before. And as you can imagine, expedited processes and interventions unlocked long-standing bureaucratic issues. And I've also noticed that it was not only for our investment, but it was also for all other investments that I am aware of. So it was a kind of VIP approach. Then there was collaboration, because there was working partnership with a different attitude. I think Mr. Patelis mentioned it. There is completely different attitudes, which means dialogue with intention to find a common ground, and of course conclude with solutions that promote the investment. Thirdly, we've seen legislative changes that actually simplified processes. The environmental permitting was one of them. Legislation across the board affecting all sectors of the economy. And without concessions, as we've seen, nor for the environment, neither on the value that created for the stakeholders. The government has succeeded several changes that I think will help further not only our investment, but also other investments. I'm under the impression that there are a number of structural reforms probably might have slowed down because of COVID-19. But I think other transformations, like the ones Mr. Patelis mentioned, and digital transformation, tax changes, they really got a lot of steam, which make a completely different environment than what it was 1.5 years ago. And it's a marked change. I would like to mention a couple of things also, and take your time just so for people to have an idea of what kind of investments we're talking. Because I'm representing, I think, the group of the foreign direct investments. And the dimension of the Eldorado Gomes investment in northern Greece is currently already invested of $1.2 billion US, 1,600 people already employed, and we're operating 2 mines in Olympias and Mavres Petres, and we're producing gold, silver, lead, and zinc. We are working with the Greek government to modernize our investment agreement, and when ratified, which I hope it will be done very, very soon, will signal that Greece is open for business. And I think in our experience so far has shown that it is impossible for any international investment to generate value for the country and the stakeholders if it's not properly protected. And you very well know that was one of the biggest issues in our case. So by establishing a stable operational framework, which in this, I think it does exist political stability going forward, and with strict safeguards, not only for the investor, but also for the Greek state. And if this is a product of a discussion and dialogue, I believe really far ahead. And that's what we are working productively with the government to achieve, and I think we are very, very close. So for the future, what we're saying will happen. We will invest $2 billion, out of which the $1 billion US it will be within the next 5 years. And we will double the existing jobs to 3,000. That will generate for the state 2.3 billion, and this will be will also be with a substantial increase in royalties, and also benefits for the community development projects that were multi-million investments, without ever forgetting our top priority, which is the environmental protection. So I think, to conclude and answer your question, yes, it was a long journey, but I think this journey comes to a new situation, to a new environment that is completely different than what was before for Greece.
Thank you, Christos. That is, to say the least, inspiring to hear, and obviously, I hope that the way you've turned things around and adding the different approach by this government and more generally the country into accepting foreign investments, and hopefully in the future we can see mistakes of the past, irrespective of any government, not to be repeated, and the trust and stability to be inviting for more investors to come in the country, also when you consider the positive returns you mentioned. So certainly wishing you the very best in the road ahead. We also have 3 esteemed investors in the panel from the alternative space, private equity and credit fund. But before we hear from them, I wanted to turn to George, who represents AXIA on the financial advisory side. and get his perspective on where the opportunities lie ahead. And obviously, we talked about some projects in the mining space of Eldorado. Alex, Patelis mentioned some other investments by international corporates. We also read on the news every day investors in the stock market, in the bond market of Greek companies, other type of corporate opportunities, a lot of real estate opportunities that have been the subject of other panels in this conference. And obviously the continuous effort the banks are making in dealing with non-performing loan portfolios and investors buying such assets. So George, where do the opportunities lie? Is it in all of the above? Are some sectors better than the other or juicier than the other for the investors? What is your perspective? And what has the impact, if any, of the pandemic been in terms of those opportunities?
Thank you very much, Pano, for your question. First of all, good evening, everyone. Very pleased to be part of this esteemed panel. I think some of us have been part of this for a number of years, and every year we gather around in New York trying to say what's right or what's wrong about investing in Greece. But this year is very different than any other year. I will explain why. The healthcare crisis was a huge test for the Greek government, which showed a high degree of organization and coordination, and we should not take this thing lightly. We are talking about Greece, the Greek government, and a global pandemic. And some of my colleagues here on this panel know from much larger and more organized, presumably economies like the UK and governments haven't dealt with such degree of coordination organization. I think that's a big plus in the perception of the global investment community towards Greece. That's one thing. The second thing is that's given an opportunity to accelerate some reforms. Don't forget the big changes that have taken place in the healthcare sector, but also the acceleration of the digitalization of the government, which is something that in a modern economy, in order to attract investments, you do need to have that. And Greece is finally getting it done. Thirdly, all these other reforms that Mr. Patelis mentioned, a number of them, he's mentioned about 140 different reforms and bills that have gone through Parliament. All these point to a country that's taking the opportunity, it's not an opportunity, but the unfortunate opportunity of the pandemic to show a different level of organization and preparedness for the life after the pandemic. On top of that, we have to add a few other factors. Greece is an economy that's heavy dependent on leisure travel. We know that, and that had a negative impact on the Q3 GDP, as we all know. But there are a lot of people, including myself, that we think that going forward, and now that there are vaccines out there, and hopefully by the beginning of this, the 2021 summer season, a good part of the population in a lot of the countries that are coming into, travelers from these countries are coming into Greece every summer, they're going to be clean to travel, and we think that's going to be the case. There's a lot of expectation about tourism. There's a lot of cautiousness. Some people say we're going to be lucky if it's 50% of 2019 levels. We actually think there's going to be a V-shaped recovery, and we're going to think that leisure travel post the pandemic is going to surprise people. It's because a lot of people have missed out a full year of their life in traveling, and I think we should not overlook the impact of that V-shaped recovery on the Greek economy. On top of that, it's an economy that's going to benefit from 72 billion of EU funds that's going to be dispersed starting 2021 slowly and leading up to 2027 as a percent of GDP. That's a huge number. And finally, we have all these initiatives from the government, including digital nomads that can now work out of Mykonos for X months of the year and still be employed in the UK or in the US. I'll give you a personal example. We had hired a headhunter in London for two specific positions in our firm, which we actually wanted them to come and base most of the time out of Athens. We spend a huge amount of time, I'd say over a year, and every time we'll reach the right person, that person would say, well, I spoke with my wife, but I don't think she's ready to move to Athens yet, and that's always been a problem. All of a sudden now, a couple of these guys have called us up and said, now we see that there is this tax break, 50% less taxes for the next 7 years. And as of January, we're going to put out an announcement. One of those guys that worked for a bulge bracket firm in London is going to join us in Athens. I see a lot of people moving to Athens or Greece as a result of that. And bottom line, it's all about trust and stability, but it's also about growth. Investors are not going to make investments in a country that has a negative GDP growth or is at par every year and there's no growth. The prospects of growth for the Greek economy in the post-pandemic era are, in my opinion, the best we've seen in as long as I can remember. And it has to do with stability, with reforms, with government. I mean, I've never seen real investments in real economy. Christos mentioned he's in the real economy and a strategic investor. So are the likes of Microsoft and all that. But also these gentlemen here, most of them are making real investments. And they're buying out companies, they're consolidating sectors. I'm extremely excited, Pano, and I don't know how to stress it enough. I think 2021 will be a year to remember in the Greek economy for those investing in it. And to close your question and answer it fully, what do I think is the most favorite asset class? I think the bonds have had a good rally globally, whereas the equities in Greece, if you look around, most of the equities globally are at new highs and recording new highs almost every week. The high of the Greek stock exchange is back in 1999 and it's over 6,000 points. The general index, which is not very representative, but it is a benchmark, just I think today or yesterday reached 800 points. Greek equities are tremendously overvalued, and there are companies listed in Greece that if you compare them to their European peers, they trade at deep discounts because it was Greece. But that's not going to be the case anymore. I'm also very excited about green economy. I'm excited about some parts of real estate. I'm excited about venture capital. The panel, I think, before us was all about, startups and venture capital. But I'm also excited about consolidating sectors that were highly fragmented. Alex is trying to do it. Nikos is also, recently made an acquisition in a space that I think there's more to do. Alexis is also involved in a number of things. There's going to be, Greece is not a huge economy where you can name sectors, but there's so much to do in the real economy and so many changes. Not to mention that the NPLs continue to have an attractiveness for that type of money. But overall, I think the real economy is where the money is going to be made and in equities.
Thank you, George. And let me add that let's not forget that with respect to the NPLs, that it's about time that they start being viewed as a way to transform and improve and be a source of future growth through restructuring obligations. And it's not only about sort of trying to get rid of loans, but it's how you can get a restart, which I think is a very important message for that segment of the market. So with this backdrop, we've had the political backdrop, we had the advisory backdrop, we had a strategic investor backdrop. I want to turn to our, let's say, representatives of the professional investors, and I'll start with Alex, Fotakidis, and Nico, who work for international private equity houses with a huge success over the years. And Alex, let me start with you. And with everything that we've heard, what's the importance of the country in your analysis in making an investment? Is it can you allocate a percentage about how much you evaluate the specific opportunity vis-a-vis the country backdrop, and how all these changes and perceived improvement in the environment, in the Greek environment, help you in evaluating and proceeding with investments?
Hi, Pano. Hi, everyone. We place huge emphasis on the country when evaluating investment opportunities. We've been monitoring Greece for more than 10 years. When we started to actively look at investing in the country back in September 2016, we actually spent the first 3-4 months purely analyzing the country risks and opportunities for CVC. And CVC's DNA is to be local. We have 23 offices worldwide, including 12 in Europe. We now have a portfolio of 4 companies in Greece, and I've actually moved here to support the portfolio and also to pursue new investment opportunities. And I think when you look at, Greece is now firmly on the map for CVC. The risk premium we attach to investing in Greece is much lower today than it was 3 or 4 years ago. And why is that? Well, because as we've discussed on the panel, we do have a supportive macro, political and tax environment. And I think, we talked about trust. I think actually we certainly, we're in a position now where we have seen that trust and we want to continue investing in Greece. We think that Greece will recover quickly in 2021, and we think it's going to grow faster than most other countries in the EU during the next 5 to 10 years. And there's opportunities across different sectors and also across different strategies, whether it's consolidation, whether it's growth, whether it's focusing on exports or cross-border mergers. There's a huge opportunity, and we're pleased to be here, and actually we hope to increase our investing activity in the coming years.
Yeah, that's great to hear, and certainly the country is very lucky to have investors with your profile. Nico, turning to you, you've invested in Greece over a number of years now and in different sectors. How do you evaluate the change in the environment, and is that a bigger driver of the opportunities that you see, or do you think opportunities available are also there as a result of the prolonged crisis that Greece has faced since 2010?
Well, good evening, everybody. To start with, I have been investing in Greece for the last 15 years, actually, and I have to say, not because of this panel, not because of the forum that we're having this, that I actually do think is probably the best time that I genuinely think that the country has a chance to attract foreign investment. And it's very much for the reasons that Mr. Patelis and also Mr. Linatsas were mentioning about the change in attitude, all the reforms that are happening, all the investments that are made from a government perspective to change a bit the image that the country has had. But this is not just a marketing ploy. You can see it that it's really happening in the economy, and it's becoming very obvious to all of us. And I think it's no doubt that Greece has achieved a very large fiscal adjustment even before COVID. COVID interrupted that. I think there is clearly a willingness from the government to continue that. I think you've seen a lot of confidence coming back, and a confidence not just from foreign investors, but also confidence of the Greek people. And it's a big test actually for foreign investors if they also see their own local people investing in their own economy before the foreigners invest in the local economy. So it's an interesting test to see this happening, and I think it's going to continue to happen very much so. I also, though, without repeating the reasons why I think Greece is attractive now more than potentially other times that my fellow panelists has mentioned, I want to make 2 or 3 points. First of all, investing, especially for global investors, is as much as an absolute game as it is a relative one. And I think that from a relative perspective, I do think that Greece is now at a stage where on a relative basis, it can grow faster than the rest of the European Union. And if it actually does happen, I think you will see a lot of money coming into the country because there is a lot of liquidity out there. Just the industry that Alex and I are in the private equity world has $2 trillion of uninvested capital. So that money is looking for a home. And I think Greece has a unique opportunity to take advantage of that liquidity out there. And I think it can very well do so. I think it has also a unique opportunity to take advantage of the disproportionate benefit that is having from the EU recovery funds. And I would urge the government, and I know they're going to do it, and everyone else to make sure they make good use of this money, because this can become a true catalyst for the country to restart, for the country to grow, and to link to what George Linatsas was mentioning earlier. Investors invest for growth. So if actually the country doesn't grow or the companies do not grow, no matter how exciting the environment is going to be, it's going to be very difficult to attract foreign money. Again, back to my relevant point. The second point I want to mention is that we should not kid ourselves that pricing the risk in this uncertain environment, no matter how much we believe that the country has a lot of tailwind at the moment, is not an easy task. So that is the risk that requires conviction. It requires confidence, and it requires trust. And that's where I think I keep hearing the word trust, which is absolutely a key ingredient for anyone who's going to decide to come and put money in the country. And I think that is becoming very apparent. And the last thing I wanted to share is this country has very good companies, and it has also very good management teams. And it has been unfairly underinvested because of the aura or negative aura that it had as a country. And I tend to say that we invest in companies, we don't invest in countries. But it's impossible not to take into account what the dynamic and the overall environment of a country is as a foreign investor before you actually decide to pull the trigger. So there is a lot of tailwind in the country. There's a lot of proper reforms that are happening. There's a lot of positive attitude. And I'm personally encouraged, and I think ultimately we all vote with our feet when we make the actual investments, that this will continue, and I hope it does so genuinely this time.
Thank you. No, we all hope that. And with that note, and with the 2 trillion that you mentioned being available on the sidelines, and with Alex having moved to Greece and looking for additional opportunities, let me turn it around a bit. And can you highlight, and start with you, Nico, what can an investment group like BC or CVC offer to a Greek businessman? Where, looking at it from the recipient standpoint, is it an exit and cash out on their business? Is it a partnership opportunity? What's your message to the Greek entrepreneurial and business community of relationships and investments from private equity funds?
So it's a very good point, because ultimately there's a lot of capital around. So and we don't pride ourselves for being passive capital. So you want to be an active investor. We have done deals very often where even the founders or the families or the seller ultimately of the business continues to be our partner in the deal. Pharmathen, which was an investment we made 5 years ago, an excellent company in the healthcare space, is a good example of this. And I think what we bring is probably 3 or 4 things. First, apart from financial muscle, which is important and should not be underestimated, because a lot of companies, when they grow, they need investment. And if you do have the capital and the appetite to invest behind the businesses, you can help accelerate that growth. And that investment, by the way, can also happen in areas, for example, like research and development. If I take Pharmathen as an example, we have invested more than 250 million euros of R&D in the last 5 years. Now, unless you have the financial muscle and the knowledge and the confidence, which goes back to the previous point, to do so, it's very difficult for the company itself to have that conviction to do it. Secondly, and I think it links to a lot of my fellow panelists here from other funds, when you have a global fund, you have a global network. And that network transcends across advisors, industry experts, anything. And that, as an institution, we always want to bring to bear by definition, because if we help our investments, that means we're going to make a better return. So that's also important. We have better access to financing because we have global relationships with the world's biggest banks. So we might be able to get that extra marginal lower cost potentially when we're trying to finance a transaction. We can also help companies when it looks at M&A, because a lot of companies are looking inward in focusing on their own business, whereas we can help them identify other acquisitions. And again, my fellow panelists have done it in their own portfolio companies, where we try to consolidate markets which are fragmented, and where you actually buy a platform and you want to build on top of it. And I would say, finally, we also bring sector knowledge, because a lot of cases, if you have a global firm, if you are a global firm, you have a lot of knowledge on various parts of those worlds, and maybe some trends that are happening in the US have not necessarily already transferred to Europe, and let alone into Greece. So if you bring that know-how from a sector, it really can help the business. It's a good example. Our most recent investment was our investment in Forthnet in Greece, which is an investment in a sector that we have been globally very active in, the telecoms and media. But we made this investment through another portfolio company that we have, which actually is a leader in the region when they do telecoms and media. So they bring, in addition to financial muscle, they bring a lot of know-how. They bring a lot of content experience, a lot of bundling experience, pricing experience, everything else that a Greek company cannot necessarily know because it operates in the little sphere of Greece. So I do think that as international investors, we can bring more than just money to the table, and I hope that it's the case.
Yeah, no, I think that is clearly the case, because that experience, I think, and being a partner can be instrumental to a more international success in a way that, you know, getting money through the capital markets perhaps will not give you that sort of partnership and that guidance and those connectivity points that you very correctly mentioned. Let me briefly switch gears and raise the same question to our last, but by all means not least, panelist, Alexis Atteslis from Oak Hill Advisors. And you know, you are a credit fund, and can you give us your perspective in terms of the solutions that a fund like Oak Hill can offer to the Greek businesses, and how do you see the current opportunities based on the legal framework for your investment strategy, Alexis?
Thank you, Panos, and good evening, good afternoon to everyone. I think it's great. It's very encouraging to see large blue chip, like the world's leading private equity houses, investing in Greece for the first time after so many years. But I think there's still a role for an alternative finance provider, for alternative capital, to help fill the funding gap and subsequently the investment gap that was mentioned many times on this panel. Definitely the banks are back into business. They're lending again, but very selectively and have certain criteria. The capital markets, and both the debt and the equity capital markets in Greece, are not as developed and only are available and open to certain companies of certain size and who meet the criteria for these capital markets. So an alternative finance provider, and that capital can be in the form of debt, minority equity, or a hybrid, can bring additional flexibility. For example, corporate governance. We don't need control, which in the case of Greece, where 75% of the economy is accounted by SMEs, and a lot of them are actually family-owned businesses, that can provide that capital for growth, for consolidation, to become regional leaders, but can also facilitate the investment of private equity, for example, right? Because we know that private equity uses financing in leveraged buyouts, depending on the case. And although Greek companies have issued bonds, it's a very selective group, and sometimes the size doesn't meet the minimum threshold for the capital markets. So we try to become partners to management teams or to owners, and then with flexible capital, with also a range of risk and return, we try to meet their funding needs. So we can come in and provide both debt more flexible and than the banks would provide, or debt and equity. So I think there's a kind of complementary capital that can help fund them or fill the 100 billion investment gap that I think has been identified.
No, and that's certainly a very important point for investors to know, that there are different options when you're looking at international funds and assessing opportunities or for whom to partner with. Let me also touch with you three, and I'll start with Alex Fotakidis. You know, this is all great, putting the money into country, investing, good companies, growing, etc. But historically, and I stand to be corrected, Greece hasn't been the best example of successful exits. There've been exceptions. I can think of Ron Capital's investment in S&B. There've been exits in the real estate sector, and I think here is an area where, you know, even though a company might be good, assessing the country also might pose some difficulties. How do you envision and how do you strategize about the exit event 3, 5, 7 years, depending on your horizon after your investment? And how do you see Greece positioned in terms of those exit opportunities? Alex, you want to go first?
Sure. difficult question. But look, and following on from what Nikos said in terms of what private equity brings, and I agree with everything he said. And one of the attributes is also private equity discipline. And what does that mean? That means in the way that we report, in the way that we compare performance versus other companies in other countries, in our portfolio, but also in preparing management teams for exits. I think that's an important part of our job. And actually the exit process starts almost day one. It doesn't, we're not in a rush to exit. Indeed, in the companies that we can continue to grow and develop, we'll look to hold as long as possible. And I think you'll see this trend in private equity. You'll see that the companies, the average hold of our portfolio is 7 years. And I expect that will grow over time. But I do think it's important to start to educate management teams in how to prepare for exits, and also to identify early on which way you can exit, and giving also the incentives for management team to deliver an exit. Now that may be an IPO, it may be a strategic, or it may be to another financial investor. And I think once you've put out your roadmap for the exit, actually having the management team spend time, first of all, preparing the company for a potential IPO and all the work around corporate governance and boarding and other work streams. Secondly, if talking to strategics, going out there through our network, talking to potential strategic partners, meeting with management teams from other sectors. We've done that with our hospital group. With the team that we have in Athens, we visited the leading hospitals in Spain, in France, in Finland, just connect experts across the sector and share ideas, share best practices, but also it could be a way to an eventual exit. So I think that's part of what we bring. Now, specifically to Greece, you're right. It is a more difficult environment, and it just means that one aspect of our work, and as we go into an investment, is thinking carefully about the exit and taking our time to prepare for it. But most importantly, we need to focus on helping the company grow, helping the management team develop, and the exit will then, will come. We really need to be patient, but that's something that we can, we've learned and can do.
Thank you, Alex. Nico, your thoughts on this topic?
Not really much to add. I mean, if you think about it, from our perspective, having exit optionality is very important. And I would say in the past, Greece, unfortunately, was not offering that exit optionality because the IPO markets were indeed closed. The country, given its size on a relative basis, is not necessarily always a strategic hub or a strategic country for international big strategic investors. And also financial sponsors or financial community was a bit scared to invest for all the reasons that we had. I think now, for all the reasons we just discussed, I think all three routes have opened up. I think the stock market is the one that probably will, in my book, I think it's going to come last in following this, because it needs that liquidity, it needs that credibility, it needs that international focus in order to attract companies of size. But it's there. It used to be like this about almost 20 years ago. There's no particular reason why it should not come back, especially when it's run properly as it is today the case, and when it has the right infrastructure behind it to support international companies. I do think that by definition, certain exits are easier depending on the type of asset that you try to exit. So if you have a company which happens to be based in Greece, but has sales internationally, or it's a more global business, it by definition will attract more potential candidates than a traditionally Greek-only, Greek-focused business. So a lot of us are always looking for that panacea, I would say, of that Greek company with excellent management team that happens to be based in the country, but is able to export a lot internationally. The more of those, I think the easier it's going to be to exit. But I think as a country, again, comes back to the one thing and one thing only, growth. If you do find growing businesses, and in a zero interest rate environment, investors are looking for growth. Strategic acquirers are looking to add on for growing businesses. And the public markets, by definition, will welcome growing companies. So as long as you can able to get growth, your options at exit will increase.
And if I could add to that.
Yes,
point,
please. I was going to turn to you.
Yeah, I think the last 2 years has been great, and obviously Greece has transformed in the perception, and obviously with actions from the new administration. I think the test and what will be very important for the future and for exits, but also attracting is for that stability to continue, right? So obviously Greece has had its fair share of boom and busts and political uncertainty, but a prolonged period of political stability, kind of friendly investor policies, that will definitely change the perception of strategics. Greek companies can become local aggregators, not just regional aggregators. So we can see consolidation across the Balkans or Central Eastern Europe. But I think the exit in 7 years or 5 years from now, the exit opportunities and optionality could be very different if the current kind of environment continues.
I have two last questions that I want to address to each of the panelists, and you know, we've spoken about many positives, a lot of optimism, but I want to ask each of you 30 seconds per answer. What are the most significant challenges that remain opposite this sort of positive environment? And Alex, Patelis, I'd like to start with you.
You know, I would say that the standard answer has to be that any government needs to, or anybody in any job actually, needs to maintain the same speed and the same enthusiasm and the same concentration and focus every year. And every year that go by, obviously a little bit more tired, a little bit more of this, a little bit more of that. So I would say the challenge is just to remain consistent.
Christos?
Well, I think the challenge of the pandemic, Panos, still remains. It's a threat that we will continue to be there and pose serious risks. So it's important that the government helps for the economy to bounce back and then continues, I think, with the structural reforms. I think that these are the two challenges that I see the most significant at this point in time.
Thank you, George.
I think black swan events like the pandemic that we are currently all witnessing and going through, we've had a share of those over the last 10 years globally, not just in Greece, but especially in Greece. You know, in markets and in economies, there is a timing. Timing is very important. So you can have trust, stability, and growth, but you may be off in timing. And what I mean by that is now is the time where a lot of money will come into the country from private investors or from EU infrastructure funds. Now is the time to capitalize on that. So the commitment to the reforms, the commitment to the stability, and the commitment to this marathon. This is, look, every day is a new day. And hoping that there's not going to be another, you know, black swan event happening 9 months from now is what's going to, you know, get it done. And that's my only fear right now.
Alex, Fotakidis, challenge, and is there something we're lacking as a country when you compare us with other European destinations that CVC is investing in, and you say Greece should have that attribute?
I think starting with the challenge, and this is I think a topic we've talked about before. Reversing the brain drain, I think, is critical to accelerating growth. We're seeing early signs, but I think there's still a huge way to go. And I think actually, again, private equity can help attract talent and help successful Greek professionals who are working abroad to come back and work for our portfolio companies where they feel more comfortable with an institutional and international investor, and also with incentives. And so I do think actually the brain gain is really now the next important challenge. With regards to Greece specifically, and touching on the point that Alexis mentioned, there's only 4 banks here, and the liquidity available in that respect is fairly limited. And I still think institutional debt investors are quite risk averse towards lending into Greek corporates, and the risk premium they attach is significantly higher than it should be. So I think we need to also help in terms of attracting institutional debt capital into Greece, and that will help support the portfolio companies and the acquisitions we make alongside the Greek banks, who are good partners.
Thank you, and I hope more follow your lead in terms of reversing the brain drain. It's great to see somebody leading by example in that respect. Nico, comment on the challenges and sort of the comparison with other target countries.
On the challenge, I would say I don't know if it's a challenge or a wish, but I think the country needs to maintain its momentum, and they need to stick to the plan. And it's very difficult to be derailed because it's human nature to be derailed, but they've started very well. So I think we need to stick to the plan, maintain the momentum, because momentum drives, it's self-fulfilling. Then you do have people coming back into the country, you have people investing in the country, you have people willing to lend more because they believe in the companies, you have that growth. So my first challenge will be, it's not a challenge, it's a wish, is that let's make sure that the country maintains that positive momentum and the confidence that it has been able to build, because confidence is very easy to lose, and reputation is very easy to change. So that would be my hope and advice, especially to Mr. Patelis as our friendly government representative here. I think what I've seen in other countries, I really think that this country has a genuine competitive advantage when it comes to intellectual and management capital. I'm saying it with full acknowledgement, having invested for 15 years, that the caliber of people that Greece has is second to none. And I do think that therefore what it lacks is that whole outside environment to make these people flourish. And I think that's a difference that it doesn't have, but that's a difference that I actually think it's about to change, and hopefully for the better.
Thank you. Alexis, your thoughts on these 2 issues before we go to the very quick last question.
Yeah, I couldn't agree more with what Nikos mentioned. I think Alex touched on it in terms of making it easier for institutional debt investors to come to Greece. There's still some legal and tax challenges, which I think with the help of the government, that could make it a lot easier. I think the stability will provide the platform and the context for institutional capital, not just equity, but debt as well, to gain confidence again in the country.
So then let me start with you now for the last question, since we kept you last up until now. December 2025, God willing, we're in New York, same panel. Question to you guys, looking back the last 5 years, what do you see Greece standing today in 2025? 30 seconds. Alexis, starting with you, and we go in reverse.
Thank you for giving me the honor of answering the most difficult question. I actually think that we're going to look back and see that the last 5 years were a unique opportunity to invest in the country. I think Greece 5 years from now is going to look very different. I think Alex and Nikos spoke about the risk premium. I think the risk premium is going to come down. I think we will probably less opportunities for me to invest, because the cost of capital will come down and the country will re-rate. So the opportunity is in the next 5 years. It could actually be less than 5 years as well. This could be in 2023 than 2025.
So we have to rush and go there and find the opportunities. Okay. Let's go quickly with the rest, because we have 3 minutes left. George?
Where do I see Greece in 5 years from now?
Yes.
I want to see the brain drain becoming brain regain, and I think we're going to see that to a great extent. I want to see a GDP growth that is well above 3.5% annually the next 5 years. I think it's easily achievable. And I want to see government representatives on the same panel like Mr. Patelis is now to continue talking about reforms, trust, and stability. Because that means that, you know, the commitment and the marathon, which is important, as everybody said, is going to still be there.
Thank you, George. And we're down to our last minute, so I'd like to turn it to Alex Patelis for the closing remark on this last question.
Thank you very much. I'm afraid I'm going to be a little bit of a killjoy and say that we are focused on the near term, and I will leave the forecasting to other people. I don't feel that it's right for the government to make such projections. We're just focused on doing our job.
Well, I will interpret that is the messaging we want on trust, consistency, and attention to detail. So hopefully that will lead us to a positive forecast for the next 5 years.
Maybe you should ask Christos where he wants to be in 5 years from now as Eldorado Gold. I want to hear that answer before we go.
That we have another 5 Eldorado Gold companies at the size of Eldorado in Greece, in northern Greece, actually.
That would be a fantastic outcome. Thank you all very much. I hope the audience enjoyed the discussion. I certainly, it was a great honor to moderate a panel with all of you. And if I don't see you any sooner, wishing everybody, our audience, our panel, and the whole Capital Link team a very Merry Christmas and happy and healthy 2021.
Well, I would like to thank you all. I mean, I have been listening to this, and I have to say it has been a tremendous panel, great insight. I'm delighted that we had on the same panel very harmoniously, and you know, both the government with Alex Patelis and major investors and banks. Look, I think we have all gone through ups and downs, and hopefully, right now we are 5 years from now, things are going to be a lot better than they are today. And I think we are on the right track. I think all we have to do is stay the course. So last year, the Prime Minister said Greece is back. This year, the message is we look ahead with confidence. And I will conclude by saying next year, we're all going to be in New York together. So thank you to all very much. I really appreciate that you took the time. I know it's very late in Europe. And I appreciate that you took the time to be with us today. Thank you so much, really.
Our pleasure, Nicola.
Thank you, Nick. Thank you, Panos. Thank you, everyone. Happy holidays.